from these active ETFs that track specific parts of the market to ones that follow indices, or in this case, a cryptocurrency overall. You know where I'm going, right? Bitcoin. After a huge 2 weeks of new highs and a major industry conference, Bitcoin ETFs are now seeing some of the biggest day of outflows since February. But this also comes after a 6-week streak of inflows. Maybe, Nate, I'm going to start with you on this one first. Just how much are cryptocurrencies still going to be, maybe to bring this full circle, a momentum trade, if you will?
Well, first, I think we have to offer a few stats on the iShares Bitcoin ETF in particular, because the numbers it's put up are absolutely remarkable. IBIT just took in its second highest monthly inflow total ever in May, about $6 billion. And to your point, it's taken in new money almost every single day for about the past 6 weeks. It's also now in the top 5 of all ETFs in terms of inflows this year, approaching $12 billion in new money. And I just think this is all highly impressive for an ETF that's only been on the market for about 17 months. I mean, we're talking about a nearly $70 billion ETF overall. But taking a step back and just thinking about spot Bitcoin ETFs, in general, I think there are several factors at play here. I think number one, financial advisors and institutional investors, they're just becoming much more comfortable with the idea of owning Bitcoin in a diversified portfolio. And if you think about this, it's a process where anytime investors have access to a new asset class or a new strategy, like how ETFs opened up access to Bitcoin, advisors and institutional investors, they don't typically just jump right in without looking. There's an education process, there's a due diligence process, and that can take some time. And I think what's happening now is we're simply hitting a point where investors are becoming more comfortable, right? They've had time to learn and conduct that due diligence. And then I think the other key factor here is just simply the performance of Bitcoin and how it's somewhat decoupled from the broader markets recently. Because if you can own an asset that has a lower correlation to other assets in a portfolio, and it performs well, that's a pretty good combination. And Bitcoin has shown that here more recently. And so I just think there's no question that it's getting the attention of advisors and institutional investors who may have been a bit skeptical previously of owning Bitcoin.
All right. So, Jay, this is a good point that's being made by Nate right now. There is a comfort and intelligence factor, also perhaps an allocative factor to this whole Bitcoin trade now that it's in an ETF format. Is it a situation in your mind where you are seeing evidence, Jay, that there are advisors or retail investors who are now in that kind of allocation comfort phase where they can say, hey, X% of my portfolio is going to go towards cryptocurrencies and specifically for something like Bitcoin?
Absolutely. I think the world's changing every day when it comes to that. You know, I thought about this in 3 stages. You know, first, you bring the product out. It's about access. You know, the second is you educate people about what it's providing access to. Bitcoin, what is it? How could it work in a portfolio? But the third stage is about implementation. People really taking that leap to allocate to it in a portfolio. Everyone's on different stages of the journey. We've certainly opened access with the launch of IBIT last year. Many people are learning about it from an educational perspective, but implementation is where we're starting to see some really good tailwinds. You know, BlackRock's own models have allocated to IBIT in some of the alternative models as a diversifier in a portfolio that behaves very differently from traditional assets. We've seen other institutional clients start to make allocations in their portfolios. We've seen some advisors making allocations. So this Step 2 and Step 3 around education and implementation, we're still very deep in those stages and continuing to see more progress, especially as the Bitcoin story resonates in this environment where people are really looking for global monetary alternatives amidst more uncertainty.
So, Jay, speaking of those global monetary alternatives, is there in your mind maybe a hypothetical or even an estimated timeline for when these types of investors, retail or otherwise, institutions or otherwise, and or just investment advisors overall, start to get more comfortable with things that are not Bitcoin, but smaller ones? I'm thinking about Ethereum. Ether is one of them, maybe Solana, some of the other ones that people know but aren't as big as Bitcoin. Do you feel as though that comfort ramp is going to be there for some of those smaller currencies and coins as well in the crypto screen?
It's difficult to say, difficult to speculate on that. Bitcoin, Nate said it, we're 17 months in, and I think various different people are in various different stages of that journey of understanding or implementing this asset. I think what's changed in the last month that's notable are the flows into our Ethereum ETF, ETH, which has seen about $1 billion year to date, with the majority of that coming just in the last 3 or 4 weeks or so. It's an evolving landscape. We're seeing there's certainly been some strong performance of late with Ethereum after difficult beginning of the year. We've seen some progress, particularly on the policy side, that could be more accommodative of things like stablecoins and other digital assets. And we've seen a big upgrade to Ethereum, which has brought kind of a new narrative into the space as well. So from our lens and the clients that we're speaking to, Bitcoin is still the vast majority of the conversations and the interest amongst professional investors, but we're starting to see Ethereum really pick up as well.
All right, Nate, to kind of close things off with you on the crypto side of things, specifically with regard to exchange-traded products, do you think that there is going to be more robust demand for some of the exchange-traded products tied to things that are not Bitcoin within cryptocurrencies?
I do. I think Jay hit the nail on the head in that it's just, we're so early and there's such an education process that has to take place. And let's just take Ethereum. I view Ether much more as a technology play versus something like Bitcoin, which many view as digital gold. And that takes some time for advisors and institutional investors to get comfortable with in trying to determine where that fits into a diversified portfolio. So I just think we're very early. I think as that education happens, I think investors will become much more comfortable allocating to something like Ether. And quite frankly, we have a much more crypto-friendly SEC right now. My expectation is that we're going to see a wave of crypto-related ETFs coming to market later in the year. And so investors are going to have a lot more options to wade through in the crypto space.
All right. A big conversation for sure, covering a lot of ground today. Gentlemen, thank you very much for joining us here. That does it for us on this week for ETF Edge. My thanks to both Jay and Nate. And remember, you can catch all of our past shows at etfedge.cnbc.com. Thanks for joining us. We'll see you next week.